Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 15th, 2025, and we're diving into the latest earnings report from Hain Celestial, a leader in the global health and wellness sector. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Hain Celestial has been a significant player in the health and wellness market, and their latest earnings report provides a lot to discuss, especially given the challenges they've faced recently.
Revenue and profitability overview. Let's start with the top line. Hain Celestial reported net sales of $363 million for the fourth quarter, a 13% decrease year over year. The net loss was a staggering $273 million compared to just $3 million in the prior year. John, what are the key factors behind these numbers?
The decline in net sales is primarily due to a significant drop in organic net sales, which fell by 11%. This was driven by an 11-point decrease in volume mix, while pricing remained flat. The net loss was heavily impacted by pre-tax non-cash impairment charges of $252 million related to goodwill and certain intangible assets. Additionally, the gross profit margin decreased by 290 basis points to 20.5%, reflecting challenges in managing costs and sales volume.
Strategic initiatives and turnaround strategy. Alison Lewis, the Interim President and CEO, mentioned a turnaround strategy anchored on 5 key actions. Can you elaborate on these initiatives and their potential impact?
Absolutely. Alison Lewis highlighted the company's focus on optimizing cash, deleveraging the balance sheet, stabilizing sales, and improving profitability. The 5 key actions include streamlining the portfolio, accelerating innovation, implementing pricing and revenue growth management, driving productivity and working capital efficiency, and enhancing digital capabilities. The shift to a leaner, more nimble regional operating model is expected to prioritize speed, simplicity, and impact, which could help Hain Celestial navigate the current challenges more effectively.
Segment performance and challenges. Let's delve into the segment performance. North America saw a 14% decline in organic net sales, while international sales were down 6%. What were the main challenges in these segments?
In North America, the decline was primarily driven by lower sales in snacks and meal prep categories. The segment's gross profit and adjusted gross profit both decreased by 33%, with margins impacted by lower volume mix and higher trade spend. Internationally, the decrease was mainly due to lower sales in meal prep and beverages. Adjusted EBITDA for the quarter was $20 million, down from $40 million in the prior year, reflecting these challenges across both segments.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of Q4, but Hain Celestial reported an adjusted EPS of 9 cents. How should investors interpret this beat?
This is indeed a positive surprise, as the actual adjusted EPS of 0.9 cents exceeded the forecast of 0.4 cents. This beat indicates that despite the challenges, Hain Celestial managed to control costs and improve operational efficiencies better than expected. However, given the broader financial challenges, the sentiment remains cautiously optimistic, with a focus on how the company will execute its turnaround strategy.
Operational efficiencies and future outlook. Looking ahead, what are the key areas Hain Celestial needs to focus on to improve its financial health?
Hain Celestial needs to continue focusing on operational efficiencies and cash flow improvement. The free cash flow was negative $9 million in the fourth quarter, and while total debt has decreased to $705 million, the net secured leverage ratio remains high at 4.7x. The recent amendment to their credit agreement to provide increased operational flexibility is a step in the right direction. The company's future focus should be on executing its turnaround strategy effectively to stabilize and grow its financial position.
Key takeaways. As we wrap up, John, could you provide a brief summary of Hain Celestial's performance and its investment prospects?
Hain Celestial's fiscal year 2025 results reflect significant challenges, with net sales down 10% year over year and adjusted EPS dropping to $0.09 from 33 cents. However, the company has made progress in reducing debt by $39 million and is actively implementing a comprehensive turnaround strategy. The success of this strategy will be crucial for future growth and stability. Investors should watch how effectively the company can execute these plans in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Hain Celestial's performance in the comments below.